Welcome to TradeTheMBA.com. This is John. This report is for the 2nd of November. And you can see we had that big push-up. Couldn't sustain it within the intraday aspects of it. It also puts it in the beginnings of what we're seeing here as a magenta. It's a little early for that because you still have rising shakeout into that, but it can flip pretty quick here. We're seeing the orange starting to rise, and we're pretty much in a dead zone here of the midterm buyers in green and red. It's flat on that DOC readings here, and it's just indicating that we had positive extreme move. Low had to be taken out. We've already seen that take place. Intraday, when we look at the 5K, it was pretty clear. We just had this massive run up, sort of like an exhaustion sort of move. The trouble with that daily, though, is like this lower shakeout. If you're not going to exceed it, fine, we've had the reset, but still it creates a divergence when you end up with that lower peaks and higher highs, and that's exactly what we've got, which is, again, the backfill is going to be the whole breakout move. So and it's not uncommon when you break out into new highs to see that. You get the big run up, come back, test the original breakout mode, and that becomes the support point from which you then press forward on. So Euro basing right here above this, key line, the outside range line that I've had drawn here. And so that's pretty much an important aspect. As long as that stays elevated, I think the market continues to gain support simply because it becomes attractive to be in the U.S. market with the exchange. TLT still arbitrarily high. Of course, the new Fed chairman named. There's still this opinion that the U.S. economy is going to stop, stall, or not move. We're not seeing it with the realities on the actual ground and how things are progressing, but clearly that's what treasuries are telling us, or there's just so much fear about being in the market that they're willing to take no yield versus risk, which is possible. It doesn't make it any less more ridiculous, but needless to say, that hasn't stopped people in the past. But it's not really relevant to the situation. It's just in divergence to what we expect to see from the Fed going forward, at least for minutes. And I think that's going to be the interesting one, because there's no getting around the fact that rates are likely to rise, and if they do, puts pressure on the debt and other things like that. So we're going to see where that shakes out, because I think that's important. Gold, still, again, that's going to be the interesting one, because it should skyrocket on inflation concerns if we actually begin to see any. So here's what the intraday looked like. It was quite beautiful here. We had this nice spike. We had the buys going into the end of the previous day, and then we started to accelerate that dramatically. It got too much, and then we ended up, let's right about here, we ended up with the DOC spread below the ABM, and then we just retraced because we had the higher lows, which meant we were coming back to the zero line. Hit the zero line, hit the 50% mark, and couldn't break past it on zero on the shakeout here, and then we started to break down again, and that caused new lows to take place. We're just working right back up to the previous low range right here. So that was nice. That was pretty clean. And again, like I mentioned, I expected the ranges to start increasing, and that's starting to give us a little bit more amplitude and get back into a normal fluctuation. But this range, I don't see as problematic in any way, shape, or form for us. It's really more consistent with that sideways with gradual up. But we will be keeping an eye out on this to see if we get a spike in short interest, because that's what it's going to take to really propel things lower, along with a complete reduction in midterm and long-term buyers. Right now you can see short-term buyers have been fading for the last week since the big blow-off. They took their gains and have just been resetting it. It's not been that deep, so a turnaround too soon, and they're not going to have any juice to really do anything. So that's the start of the month. We should see new fund money coming in. So if they're going to be buying any of these continued dips, that is what we're going to be looking at probably towards the beginning of next week, though, would be the key, or even as early as Friday would be like an early setup. So keep an eye out for that. As always, though, trade well. We'll talk to you later.